All right, let's dive into something that catches a lot of U.S. taxpayers completely by surprise: money held outside the country. If you have a foreign bank account or investments, there's a reporting rule you might not even know about. And believe me, the penalties are serious. So, let's break it all down.
So let me just ask you a question right off the bat. Do you have any bank accounts, investments, or really any financial interests located anywhere outside of the United States?
Okay, if you answered yes, then you really need to listen up. This is where a lot of people get tripped up, because there are two different forms you need to know about: the FBAR and Form 8938. They sound kind of similar, but mixing them up can lead to some incredibly expensive mistakes. First, let's tackle the FBAR. And right away, here's the first big curveball. Look who you're reporting to: FinCEN. This is not an IRS form. It goes to the Financial Crimes Enforcement Network, and their job is all about sniffing out financial crime. So what is this thing? Well, FBAR stands for Report of Foreign Bank and Financial Accounts. It's basically how the government keeps tabs on money to prevent illegal stuff like money laundering. And you've got to file it if you have a financial interest in, or even just signature authority over, those accounts.
So who exactly has to file? The government uses this term a United States person, and it's way broader than you'd probably think. It's not just citizens and residents. It also includes U.S.-based entities, like corporations or LLCs. And that's a huge point. This isn't just about individuals. It can be your business, too.
For the FBAR, this is the magic number you have to burn into your memory: $10,000. If the grand total of all your foreign accounts combined goes over 10 grand at any time during the year, even for a single day, boom, you have a filing requirement.
So what kind of accounts are we talking about here? Well, it's all the usual suspects, right? Your basic checking, savings, and brokerage accounts. But here's where it gets tricky. It also includes things you might not think of, like an insurance policy or an annuity if it has cash value, or even shares in a foreign mutual fund.
Okay, let's pivot to player number 2, Form 8938. Now, this is the one that goes to the IRS. You don't file it on its own. It actually gets attached directly to your annual tax return, like your Form 1040.
See, unlike the FBAR, which is about crime, this form is all about tax compliance. The IRS uses this to make sure you're reporting all your income from everywhere in the world. It's pretty much a statement that says, "Hey IRS, just so you know, here are the foreign assets I have."
Now, this is where Form 8938 starts to get a lot more complicated. The filing thresholds are way higher than the FBAR's simple 10 grand. Plus, they change depending on your filing status and whether you're living here in the States or overseas. And this chart just drives that point home. Just look at this. For a single person filing in the US, the threshold starts at $50,000. But if that same person is living abroad, it quadruples to $200,000. And remember, these are just the starting points. There are other thresholds to worry about too.
Another huge difference is what you have to report. Form 8938 covers all the same accounts as the FBAR, but then it keeps going. It also includes assets you might hold for investment that aren't even in an account, like stock you own directly in a foreign company or an interest in a foreign partnership. It casts a much wider net.
Okay, so we've met both players. Now for the main event, the head-to-head comparison. This is really where we need to clear up all the confusion once and for all.
This table really puts it all in perspective. You've got two different forms serving two totally different masters: FinCEN for crime, the IRS for taxes. And because their purpose is different, everything else is different. How you file it, the much lower FBAR threshold, and the much broader range of assets you report on Form 8938.
And listen, if you only remember one thing from this whole explainer, please make it this: they are completely separate obligations. Filing an FBAR does not get you out of filing a Form 8938. If you meet the rules for both, you have to file both, period. That's the #1 mistake people make.
So what happens if you just don't file? Well, this is where things get serious, really serious. The government does not play around with these reporting requirements, and the penalties can be absolutely brutal. Let's start with what you might call the oops penalty. If you fail to file, but it wasn't on purpose, an honest mistake, the penalty for either form can be up to $10,000 for each violation.
But, and this is a huge but, if they decide your failure to file an FBAR was willful, meaning you knew you should have and you didn't, whoa, the penalties explode. We are talking about the greater of $100,000 or a staggering 50% of your account's value.
That can wipe people out. The penalties for Form 8938 are just as bad because they stack up. It starts with a $10,000 fine. Then, if you ignore the IRS when they contact you, they can tack on another $50,000. And on top of all that, if you underpaid your taxes because of that asset, you can get hit with an additional 40% penalty. It adds up fast.
Whew, okay, that was a ton of information, I know. So let's just boil it all down to the absolute essentials, the key things you have to remember.
Think of this as your quick and dirty cheat sheet. FBAR and Form 8938 are two different things. They go to two different agencies. The thresholds are worlds apart, 10 grand versus 50 grand and up. Form 8938 covers way more stuff. The bottom line is, you have to check your own situation to see if you need to file one, both, or maybe neither. And finally, never forget, the penalties are no joke.
Look, at the end of the day, this isn't just about dodging fines and penalties. Getting a handle on these rules is really the first step to being a smart, responsible manager of your own money in a world that's more connected than ever. So I'll leave you with this one last question. Knowing the difference between these forms is one thing, but have you really taken a hard look at your own finances to know exactly where you stand?